local alien and trade for you. But let me now welcome on board Sudipta Mukherjee, MD at Texmaco Rail and Engineering, to talk about how their earnings have been. Sudipta, great to have you on ET now, and congratulations, another strong performance this quarter. But tell me, this despite all the supply constraints and export headwinds, right, early on in the quarter, you still managed to deliver a very strong show. What were the key operating levers for you?
Aisha, it's more about planning, and you see that we have a forecast, and we have a plan which is a mix of short term as well as long term mix. And if you see that the order book has a very beautiful mix now of railway order of around 55 to 60%, and balance are to private and exports, which we were aiming for last couple of quarters and years. And we have been always mentioning that this ratio we want to change very consciously, and we have been able to do it. And that's how I think that this is one of the reason, and also a strong focus on our operations, which has resulted into this output. And I can assure you that this momentum will be on in the coming quarters also, and Texmaco is all here to deliver good results while
Right.
improving all the important key ratios in the bottom line.
Right. Mr. Mukherjee, point taken. Give us a sense. Q1 was a softer quarter for you in terms of delivery. How much of the carry forward of Q1 has impacted the Q2 number? So I'm trying to understand that at a steady state, would Q1 plus Q2 be a fair first half for you? Is that how you would assess it? And how does it set you up for the full year in terms of the guidance?
So it is not at all a carryover from the Q1, Harsh, and it is like that. We operate in a system where if you see various parameters, we do not prefer to keep much work in progress inventory in the system also. And the Q1 was primarily impacted mainly for two reasons, as Aisha has rightly pointed out. The supply chain issues, and railway has a wheel supply issue. So once you get in, you cannot exactly manufacture. And in terms of the export, yes, we have little bit of inventory, but that is still on. The dispatch has started from after Q2. So it's not like that any accumulation we have got advantage of. And we will, as I say, will continue to have this upward growth momentum in terms of our top line and meeting the numbers. And we hope to meet more of bottom line growth in the coming quarters
And
from the
for
core business.
Right. So, Dipta, so give me a color on your order book right now, because what I understand, it's currently, sizable. What's the near-term execution visibility that you have?
For the rolling stocks, we have a forecast. We have a order book around little more than, nearer to 3 quarters. And you know that the other infra projects and other things are of a longer term thing. So maybe around 40-50% of them would be, we expect that we will achieve by next financial year, and balance will be for the 26, 27. And orders are coming. It's not that that is the end of it. You will see that Texmaco had been getting orders from export market, private, and all of this, and in various stages. It's in advanced thing, and in a quarter-to-quarter basis, orders are coming, and we feel our steady momentum will flow.
Mr. Mukherjee, your EBITDA margins, you've guided that your aspiration is to get to 10 to 12%. You're currently sitting a shade below 10% in Q2. How quickly does it start to hit that 10 to 12% number, and where will it lie? Would you be happier with if it just does a bottom end of that guidance, or would you want it to inch up?
So Q2 has 10.5 EBITDA. It is more than that. But while we say so, our target is that from the core business to reach towards mid-teen by in near future, in the coming few quarters. And we are also looking forward to certain more businesses in and around the core business and maybe some breakaway business from railway. And we are quite conscious that those will be definitely attributing towards taking it further beyond meetings.
Right. So could you highlight then, before we let you go, as to what's the export order book and what the order inflow from railways specifically is like, given the high capex that they've announced?
So, Aisha, we expect that we are in the we are in the middle of the last large order which railway has given, and Texmaco as a company is in schedule of delivery of that, including whatever we have received in between. And we expect that something should come up within this financial year for the next procurement cycle from Indian Railways. And in terms of the private and export, I mentioned to you that we are happy that we are more than 40% share of our order book is today from the private and the export market. And we feel that we'll be able to keep this momentum in the coming quarters, and we'll be getting orders continuously from those sources also.
And Mr. Mukherjee, if I can just ask you a couple of questions on the financials. End of FY25, the receivables number had climbed. EPC was possibly one of the reasons why that receivable number had climbed. Any unwind? Give us a sense of how that has played out over the last 6 months.
First, it's a cycle. You will find much better in all the ratios if you have seen that last couple of years and couple of quarters. Always we have improved over and above that. You may have seen something because of the little aberrations in one quarter, which was, of course, everybody knows is an industry-wide phenomenon. So we feel to answer you very straight, you will find it much better in coming 2 quarters.
Okay, Mr. Mukherjee, thank you so much for joining us, giving us that perspective. Of course, Texmaco Rail on the back of numbers.